thank you, Liz. Would you mind reading that again? I didn't quite get it all.
I will again after.
You know, it's funny when you're reading, I was thinking about auditors. There's all due respect to the auditors here, but auditors' reports, why don't they simplify it and just say, we're not responsible for anything? You know, govern yourself accordingly. Do what you like or something like that. But anyway, Richard, I'm sure we've covered all bases. That's great. Urbana's not a presenter today, so my comments are really on the basis of an introduction, a welcome, to give you an idea of what we have in mind. Urbana started its life as a mineral exploration company. It was called Macho River Mines. What a cool name, eh? Macho River. In fact, the property is between the Macho and the Panache River. You can't create that stuff. And in a place called Urban Township. And in those days, everybody had a gold mine. I thought I should have one too. And so I took over this company. It was actually run by my father-in-law. And it had minus $40,000 in liabilities and hadn't filed any forms in a decade or so. So that's how it started. We spent a little bit of money blowing up some of the landscape and came up with some very good gold values. But it dawned on me that, you know, you can take 3 weeks to get one guy with a chainsaw into the bush to do something, and he ends up cutting his toe off, and then you got to get air evac or something like that. Whereas buying and selling securities, I can do that in minutes, seconds. So in 2002, we converted. It was Macho River, Macho AU, the gold symbol, Urban Quebec Mines, which was a bit of a misnomer because they didn't have a mine, and then Urbana Corp, and then Urban Resources, and then Urbana Corp. So it's gone through all these iterations. Original 1947. Interestingly, that property we still hold in the company at zero value in the books, and we expanded it significantly. We have a very good land spread, really well located, right underneath Osisko Mines, who spent close to $1 billion exploring their property. And we're just adjacent right to them. Some of it's within 100 yards of our border. So we sit that in the books. That's a poker chip. That's what I call the lottery ticket component of our portfolio. It's there at no value, but who knows? Maybe someday we can cut a deal with that, and that might be the big winner of the whole bunch. But again, that's the lottery ticket component. We built it as an investment company, and Urbana was part of syndicates we put together to buy exchanges. We were buying companies that were private, were mutually held. And one of the things we've discovered after detailed analysis is that not-for-profit companies tended not to generate profits. Whereas if you converted them to a for-profit corporation, they tended to generate profits. So we ended up owning, we had the example of the Toronto Stock Exchange. We ended up owning exchanges, about 30 some odd at one point. We were the largest owner of the New York Stock Exchange, along with other pools that we managed before they went public. We were the biggest owner of the Chicago Board Option Exchange at one point before they went public. So that was a very good win for us and our clients. And that's how Urbana really got it started. We built it from minus 40,000 liabilities to about $450 million. We paid out roughly $100 million in dividends and buybacks. So we're down to about $350 million. I keep joking that my goal personally for Urbana is to build the asset base to $1 billion before I drop dead, which means I've got to do some really brilliant things or live till I'm 115. The structure of it is, the structure of Urbana Corporation is really unique. It is what used to be. I did an article a long time ago, Back to the Future, what used to be. This is how wealth was created before mutual funds. But the structure is it's permanent capital. Permanent capital gives you a great advantage. We can take a long view. There are companies that we've owned for 10 years, and sometimes it takes a while for them to mature. So that enables us to do that. A lot of these private equity funds, they have a sunset date. We don't have a sunset date. We can take that long view. We can come in for more money. Urbana is quite flexible. We can do everything but declare war in that company. And that's the way we wanted it. The advantage of permanent capital allows us to have private equity investments. So we don't have demands on capital. So we split our asset base roughly half and half. Public companies, private companies. And the results have been good. I mean, since '02, our compounded annual return after tax, remember tax, after tax, about just under 15%. It's not much that competes with that. So it's really been quite interesting. The companies that we own are really unique in the private company. The public ones, you can do your research yourself, but the private ones are really interesting because what we look at in our private holdings are companies that are unique, that are doing something different or doing it better than, one of the companies you'll hear about today is Fund-Through, whereas it's a factoring. Factoring is an old business where you're financing receivables, but they've set it up so you can just push a keystroke and that money's in your bank account. Or you can draw down just whatever proportion you want. But I don't want to take Steve Ooster's thunder here, but it's that kind of thing. An old business doing it different, doing it slightly better. And that's been really interesting. The key in private equity, smaller companies, is the character of management. That is the caliber of management, should I say, and character. Because you're really betting on people. For example, an idiot can run Bell Telephone. Well, and in some cases has. But you got enough management surrounding you to mute stupidity sometimes or mistakes. So it's really important. And I am so pleased with the individuals that we know and have got to know running these companies. They're top caliber people. I mean, one of the things of getting white hair, you get to study people a lot more. And I'm very impressed with that. The thing in this is one of the things that's satisfying to me is impact. Okay, you say, what are your investments? Our investments, by the way, typically when we come in for a couple $1 million. We don't come in for a big chunk. We come in for a couple of chips on the table to get to know everybody. Is everybody semi-normal? Are they competent? How's it working? Can you execute? I'm not interested in brilliant ideas anymore. I'm interested, can you execute? And that's the key. So we come in, and we usually come in for more later, and maybe several iterations as more funds are required, because newer enterprises take twice as long and cost twice as much as you originally think. So you just got to be prepared to come in for more. But let's talk about impact. This is a study done by Deloitte, who happen to be the auditors for Urbana. But they did a thing on the cannabis industry. Now, understanding the cannabis industry, now listen, I don't smoke pot. I did years ago in university, but I'd been drinking so much I didn't notice any impact. But I digress. But at any rate, let's talk about the cannabis industry with the pain and everything else, pain mitigation benefits of that. Now, that is an industry that did not exist. And it would not have existed in Canada had it not been for the Canadian Securities Exchange. Would not exist. Because the Toronto Stock Exchange, or we refer to them as the other exchange, would not listen. Their president was an American, and he was worried about getting arrested back and forth. So that created a problem there. So as far as I'm concerned, that business would not have started. There was no way to raise capital other than the CSE. But the CSE went through difficult times years ago when we got involved. And I think our original investment was $1 million, then followed by $4 million, followed by a couple more million more. Roughly, I think about $8 million. But my point here is, this is a business, an industry that would not exist had it not been for the CSE, and might I also say, were it not for Urbana, and that relatively small investment. The net result of that, and this is the study done by Deloitte, it created 151,000 jobs in Canada, created $43.5 billion to Canada's GDP, generated $15 billion in taxes for the feds, and $3 billion for the province of Ontario. And that came out of that, basically that original $4 million investment. So the reason for having this meeting today is twofold. We want to give investors the opportunity to see the companies that Urbana owns, because frankly, they're not accredited value in our share price, to say these are really neat companies. Because remember, Urbana used to trade at a premium when we owned exchanges. Those were neat things that you couldn't buy yourself. Well, we're in the same boat. We still have neat things that you can't buy yourself. So it's partly, from a self-interest point of view, to create profile for Urbana and to help Urbana. That's part one. But the other one is to let these companies tell their stories. And you could be really enthusiastic about them, because every one of these companies at some point in time is probably going to need more money, and so more financing. And some of you who are in private equity may have an interest in speaking to them directly as well for them to raise money. But we're really excited about this portfolio. And You can own them directly at some point in the future if you're a private equity investor, or you can own them now at a very, very advantageous basis via Urbana. But either way, these are great companies to take a look at, and you're going to be hearing more from them far beyond this presentation today. These are companies that are going to be major companies as we look forward down the road to these things. So I want to thank you for taking the time. I think I'm done early in my time, am I? I can tell jokes or something like that now? Or did you hear the one about... Thank you so much. Thank you so much for coming. We're a little bit early, but good.